Mangalam, thank you so much. What a wide array of people we've been getting views for as far as, the today's event is concerned. We have another such person with us, Mr. Balasubramanian, the MD and CEO at Aditya Birla AMC. So thank you so much today for being here, for talking to us. And what a great time to speak to someone like you who's seen flows coming into the equity markets from the retail side, from the domestic side, so closely, the trends there. Recently, when we saw the foreign institutional investors being on a selling spree, everybody was worried and they were looking at that figure in terms of when do we see FII buying and how much other domestic mutual funds or the domestic institutions buying. What is your assessment? How do you assess the behavior as far as retail investors during such tough times are concerned, and how has it matured for you?
I think it's been a great time for Indian mutual fund industry in penetrating into the deeper parts of the country and making sure that retail investors participate in the India growth story. So the hard work that has been done by the MF industry for the last number of years has given a huge benefit this year in terms of channelizing the savers' money into the capital market through the mutual funds from an SIP.
Correct.
In fact, look at one of the numbers, which is SIP number, which comes every month, it keeps rising, and today the run rate is about 25,000 crores per month gross inflow. That is assuming the net inflow is about 11,000 crores. But still close to about 1,30,000 crores coming in only from an SIP is something amazing development that we have seen. This has been, we all have been working for this, praying for this for many number of years. How do we make sure the Indian retail investors are made to participate in the Indian equity market? That's something that is finally is coming true. And this, in my own belief, will continue, given the fact that still 9% of the equity ownership is coming from retail.
Correct. Only
about 7 to 8% of the mutual fund ownership in the stocks is also collectively. If you look at the retail contribution, the ownership of Indian stocks is only about 9 to 13%.
Correct.
That means we still have a long way to go. As against the 43% of the ownership in US is coming from retail investors.
Absolutely.
When you compare that, I think we still have a long way to go. And second is, given the fact the interest rates in India remain the investment vehicle for investors, which has remained in the range of about 7 to 8% in terms of interest rates. Whereas GDP has been growing at about 11 to 12% of the nominal GDP. And the equity market for the last 5 years, or 10 years, or 15 years, 20 years, if we take, has given an average return of ranging from 14 to 18%.
Correct.
So when the return differential very large and also the growth story remains very, very promising for the country, my own belief is the Indian flow that has come in, it will be an autopilot. So I think hard sell that we all used to do in the past, we don't need to do a hard sell. It will be actually natural flow that will keep coming in. At the same time, market also go through a consolidation phase, which will also give an opportunity for investors actually to consolidate their portfolios and keep rising their investment over time, which is what we are seeing in the last few months as well. When the FI selling was there, not only we are observing, we also see the flat market.
Absolutely.
Whenever see the flat market give a consolidation, it gives some kind of leg room for investors to stay cool and calm and understand market fluctuation will remain part of the game. At the same time, stay convicted.
Absolutely. You spoke about two things. One is that a lot has gone in from the industry, from the regulator, and which is why you're getting this behavior from retail investors today. What I want to understand from you on a separate topic is that in India, even today, a percentage of household savings to equity markets stands at about 4.5%. We see developed economies, US, that has gone to about 14, 15, 16%. What will be the big headline number that you would be watching out for? Not today, not this year, but let's say next 3 to 5 years, in terms of where would you want to see the retail ownership or the total ownership of household savings to equity markets, let's say in the next 5 years?
So it can easily double from where we are today. That's one. I think where from will come. There's more and more savings getting moved into the getting diverted into capital market financial instruments such as an equity, mutual fund, other asset classes. You will find the percentage of the bank deposits, which currently is about 20% of the banking industry size, is the mutual fund industry size.
Correct.
I will look for about 50% of the banking industry size will be the mutual fund industry size over a period of next 5-6 years.
Correct. And, during this journey so far, we've seen various sorts of statements coming from every corner. Somebody saying that a higher inflow into the markets affects the bank's current account, savings account ratios. Somebody saying that the spending has reduced because a lot of money is going into savings through equity markets. How do you look at all this noise? And in between, where do you see the code? Do you see and believe that there is space for every asset class, even spending, along with the growth in the equity markets and the savings and the money going there?
I think all will go hand in hand, and given the fact that growth is permanent, It may go through some ups and downs, but otherwise the growth will remain permanent. The government focus on taking the economy to the 10 trillion economy and beyond by way of setting up a target of Viksit Bharat. All of them will lead to only one. The growth will continue to remain strong. But at the same time, given the fact that we are also linked to the global economic growth and fluctuation that we see in the rest of the economy, India also will go through their share of pie. At the same time, margin of safety in India will continue to be very strong.
Okay.
Because the optimism and promising growth of the Indian economy continue to drive the growth in the economic growth and also sentiment.
Okay. Thank you so much for speaking to us. I'll let you enjoy the evening from this point. Thank you so much for sparing your time.
Yeah.